including Tesla. Shares edging higher for a 12th consecutive day, marking the longest winning streak on record. KGI upgrading the stock to outperform, saying this: Tesla's automotive investments in the US are paying off. Its AI prowess is underrated. We're up by another 1.75, up another 1.8% this morning, Katie.
And if that holds, of course, that will be that 12th day of gains, which is a record winning streak for this stock. And there's a few different things that got us here. Fundamental reasons, too. Most notably, in the past few weeks, you've had the likes of Ford and GM saying that they're going to adapt their EVs to hook into Tesla's superchargers. Piper Sandler thinks that's worth a $3 billion boost by 2030 or so. And not to mention, you also have Tesla's Model 3 sedans became eligible for the full U.S. tax credit. So again, a few different fundamental reasons to go along with what's been a blistering rally. If you look at today, again, we're up almost 2%. This rally, if you look over the past winning streak that we're sitting on, it's added about $200 billion to Tesla's market cap. This company is now up over 100% so far in 2023 to go along with that record. So it's been a pretty good summer so far for Elon Musk.
A few days ago, Tesla shares were on track to post their largest daily gain in more than 2 months, furthering their recent meteoric rise, fueled by faith in the expansion of a key alternative revenue stream that analysts predict could add billions of dollars to Tesla's top line. How? In a matter of weeks, Ford Motor, General Motors, and Tesla, all competitors in the EV space, appear to have shifted the tide on the electric vehicle charging infrastructure in North America. Tesla owners have long enjoyed reliable charging away from home at the company's supercharging stations, the largest charging network in North America by far. But the charging industry at large has been fragmented, and non-Tesla owners haven't had it as easy. But that will soon change. Last month, Ford announced it had made a deal with Tesla that will allow Ford EVs to use Tesla's charging stations with an adapter. More than that, starting in 2025, it will make Tesla's charging tech standard on its own EVs. It was a surprising partnership between rivals, and just recently, General Motors said it struck a nearly identical deal with Tesla. Collaboration is a key part of our strategy, GM CEO Barra says. A network of 12,000 Tesla superchargers in North America will be open to GM EV drivers next year, initially requiring an adapter. Beginning in 2025, GM will equip its EVs with the same inlet standard for direct access, GM said. Shares of GM rallied nearly 4% in aftermarket trading after the news. The stock ended the regular trading day down 1%. Meanwhile, Tesla shares jumped more than 3% in the extended session after a 4.6% gain during Thursday's regular trading, extending its advance to a 10th straight session. This collaboration is a key part of our strategy and an important next step in quickly expanding access to fast chargers for our customers, GM Chief Executive Mary Barra said in a statement. Not only will it help make the transition to electric vehicles more seamless for our customers, but it could help move the industry toward a single North American charging standard, Barra said. Tesla's mission is to accelerate the transition to sustainable energy, said Rebecca Tanucci, Tesla's Senior Director of Charging Infrastructure. Giving every EV owner access to ubiquitous and reliable charging is a cornerstone of that mission, she said. News of Tesla's partnership with Ford and GM was well received. In fact, Tesla shares set a fresh 8-month high a few days back, jumping 4% to $244.50, after the firm announced that it will open its supercharger network to General Motors electric vehicles, coming on the heels of a similar announcement for Ford EVs 2 weeks ago. This represents a large monetization opportunity for Tesla, Wedbush analyst Dan Ives said in a recent note to clients, upping his price target for Tesla by 40% to $300. Tesla stock is now up more than 30% since announcing the Ford Charger, tacking on some $190 billion in market capitalization during that time frame. Now, everybody knows that these three are rivals. In fact, investors view Tesla as a threat to established automakers like GM and Ford. So why would Ford and GM join forces with Tesla, and what does it mean for EVs? First, unified charging. Tesla superchargers use a proprietary plug design called the North American Charging Standard, or NACS, that doesn't work with non-Tesla EVs. Most other EVs and charging stations in the US use the Public Domain Combined Charging System (CCS) plug standard. Currently, Tesla EVs can use CCS chargers with an adapter, but only Teslas can use NACS chargers. That means, while Tesla owners have access to the company's plentiful and reliable fast charging stations, drivers of non-Tesla EVs that use CCS have faced a mishmash of networks and often unreliable equipment. The shortcomings of CCS have been a growing concern for Detroit automakers as they ramp up EV production in hopes of selling their electrified models to the masses. In a study conducted last year, researchers at the University of California at Berkeley checked 675 CCS fast chargers in the San Francisco Bay Area and found that almost a quarter of them weren't functional. An August 2022 study by J.D. Power found similar results for CCS chargers in other parts of the country. Notably, it also found Tesla's charging network to be much more reliable. Tesla originally built the supercharger network to overcome potential buyers' concerns about charging on road trips. The extent and reliability of its fast charging network was a key component of its early sales pitch to customers nervous about going electric, and it has been a key component of the company's success in the U.S. since. In contrast, the unreliability of the CCS network has been a challenge for Ford and GM, along with other automakers, as they aim to ramp up sales of their own EVs. Potential buyers of a Ford or GM EV might like what they experience on a test drive, but without a reliable charging network, both have been at a disadvantage to Tesla. These new deals should go a long way toward leveling the charging playing field. Another reason to favor Tesla's NACS standard over CCS, Tesla's plugs are considerably smaller and lighter than the CCS fast charging plugs, which can be cumbersome for older or disabled drivers to use. With both Ford and GM eager to win customers who are new to EVs, improving accessibility is a high priority. In light of this, GM's and Ford's EVs will initially need an adapter to be able to use Tesla's fast charging network, usually located by interstate highways and other major arteries. GM recently announced that it was investing $500 million in a Texas plant slated to build traditionally powered full-size SUVs. Another advantage of this partnership is shortcut savings. For automakers like Ford and GM that are betting billions on a big shift to EVs, reliability issues with CCS chargers have been seen as a potential barrier to wider adoption. In 2021, GM said that it planned to spend $750 million to improve EV charging infrastructure in the US and Canada. But then, Tesla opened up the NACS standard last November, publishing the technical specifications and inviting charging network operators and other automakers to use its plug design. For both Ford and GM, that change offered a shortcut as well as a potential for big savings. We think we can save up to $400 million in the original $750 million that we allocated to this, because we've been able to do it faster and more effectively, Barra said in a recent CNBC Fast Money interview, after announcing the Tesla deal. For Ford CEO Jim Farley, these deals also signal what he sees as a new era of collaboration between automakers that goes beyond individual components. We worked with other automakers on transmissions and engines without anyone noticing in the ICE world, Farley said at a Bernstein conference in late May. Now it's going to be more on the technology side. I think that's one of the most interesting new dynamics. Now, what does Tesla get out of the deal to let its competitors use its superior charging network? Pulling non-Tesla drivers through its charging network is an excellent opportunity to bring profitable revenue to Tesla. The company has already invested the capital in building its charging network and will for sure continue these investments, so incremental payments from non-Tesla vehicles should mostly fall straight to its bottom line. Furthermore, Tesla will enjoy the implicit endorsement of its technology by long-established rivals, and it'll likely seek a share of the public EV charging subsidies made available under last year's bipartisan infrastructure law. However, it's important to note that the agreements don't mean Tesla will win a monopoly on public charging in the US, even if all automakers eventually adopt the NACS standard. The EV giant's decision to make the NACS standard public means that rival charging network operators are also free to add chargers with NACS plugs, which they almost certainly will eventually. In fact, several industry key players are already responding in the wake of the Ford and GM deals. Swiss electrical equipment giant ABB, a leading maker of commercial EV chargers, recently said that it will soon offer NACS plugs as an option on its products. FreeWire Technologies, a California-based startup building fast chargers, announced similar plans after Ford's deal with Tesla last month. Tesla's primary motivation is in line with its mission. Our mission is to accelerate the world's transition to sustainable energy, said Rebecca Tanucci, Tesla's senior director of charging infrastructure, in a statement announcing the GM deal on Thursday. Giving every EV owner access to ubiquitous and reliable charging is a cornerstone of that mission. Wedbush analyst Dan Ives said, Tesla is in a massive position of strength after building its EV castle and now is set to further monetize its success. pointing to the company's increasing ability to bring in revenue outside of EV sales. Tesla should net another $3 billion in new revenue from Ford and General Motors EV users, Ives estimated. Hit the like and subscribe button for more.